One of the biggest reports that the market reacts to, CPI came in higher than expected across the board. Month over month, we had an increase where last week was flat. Year over year, the reading came in lower than last month, but it was still higher than expected. So there was a huge reaction to that in the stock market. It was a huge red day. And I think the market actually reacted more to the Fed fund futures and the bond yields more than the actual CPI report. For the first time ever, Fed fund futures pointed to a possibility of a full % rate hike next week when the Fed meets and they make their next Fed rate decision. And then you also continue to see bond yields rip. So that's kind of how these things play out. You have the Fed trying to react to this economic data, which a lot of people think is actually delayed. And then you have the bond market trying to predict what the Fed is going to do based off of their reaction to this economic data. And then you have the stock market react to the bond market, and in this case, Fed fund futures as well, that are pricing in the possibility of these higher rate hikes, not just next month, but throughout the next year. And this is the first time the Fed fund futures really took that into account. So you saw this huge reaction from the stock market.